Welcome back to the Main Street Meets Wall Street podcast. I'm Sturdivant Sr, founder of the ABC Squared. After unpacking the bear case on Bitcoin, today we're bringing the other side of the ledger. We're joined by a wealth manager and business owner, innovator and crypto advocate, Tyrone Ross. We dive deep into the full macroeconomic and structural bull case for digital assets. Over the next 40 minutes, we're breaking down Big B versus Little B, which differentiating the immutable Bitcoin blockchain network from the token itself, financial access and infrastructure, while peer-to-peer digital assets expose inefficiencies in traditional banking plumbing, consensus and supply mechanics, addressing hard caps, blockchain forking, and network security, responsible position sizing, practical frameworks for entering the market without over-leveraging your household balance sheet, and policy and regulation. We're breaking down the Clarity Act, Genius Act, and Stablecoin Act. Make sure to hit that like button, subscribe to the channel, and drop your questions in the comments below. We're jumping right into this conversation with Tyrone.
If you care about people, which I do, if you care about the disenfranchised, like I do, if you think the existing financial system is unfair, like I do, you have to root for Bitcoin. It has to be a part of the conversation because it's this big flashlight that shines a light on everything that I'm saying. If Bitcoin goes to zero, it's a massive win because it literally showed every single thing that is wrong with the existing financial system.
7 o'clock out here on the East Coast almost. What time is it out there on the West Coast, Tyrone?
It's 4 o'clock.
4 o'clock out there on the West Coast. We're going to get fully started here in a couple minutes. Later, want to hop in. But for those who don't know, this is I'm Sturdivant Sr. I own the ABC Squared RIA out here in Wall Street, South Charlotte, North Carolina. I'm joined today by Tyrone Ross Jr. Tyrone Ross, just without the junior. Tyrone owns a couple of businesses, and we're going to get into that, and it's very interesting. 401 Financial and Turnkey. Tyrone's a Bitcoin enthusiast. For those who haven't joined or haven't heard any of the podcasts, this is a series where we're going through actual Bitcoin and whether it's a scam, whether it's 100% real, how much do you need, where are we at? You know, Main Street meets Wall Street. We're really just trying to present both sides of the pictures. I'm not going to interject to say whether I'm for or against Bitcoin, but I definitely had a bear on here for like an hour and a little bit over an hour, so people probably never bought Bitcoin. So Tyrone's going to come on and give you the juxtapose to that. Before we get started, Tyrone, what you been doing today, man? Tell us a little bit about what's been happening.
Just finished a good workout, which was nice. We spoke about that earlier, so got a good workout in. It's a beautiful day here in San Diego, like it is 90% of the year. In the mid-70s, nice breeze. Recorded this my second crypto webinar today, so doing a lot of talking on that. And then had a compliance meeting, which we all love at our so I had that. So it's been a full day, man. So after this, I'll have some dinner and then kind of sit down and prep to meet with Turnkey, my Turnkey team, to go through the day's events. So busy day, man, but all is well. And snuck in the car with my parents, which is nice.
You snuck in the car. I thought you said stuck in the car with him. I was like, internal. And then you said, that's nice. I was like, I don't know. Depends on how long we're in the car. My parents may be watching. No, that's good. Nice, relaxing day. You know, as we said, I was like, I'm about to go get a workout in real quick, but then we had to, so for those who were supposed to catch this yesterday, we had technical difficulties over there with another streaming software, but I'm not going to say the name. So we're doing a different one right now. And I was like, I'm going to get a workout in real quick. So I haven't even told Tyrone yet this yet. I walk outside, Tyrone, and so my house is like by the road. I walk outside and there's a car stopped in front of my house, but on the other side of the street with like a line of cars behind it. And there's this woman in it. And I'm like, I walk over towards her. I'm like, do you need some help? She's like, I ran out of gas. So I said, all right, I'll help you push the car. So like me and two dudes got and pushed her car off the side of the road. She got lifted, like go get her some gas. Yeah, and bring back some gas. I let her use my gas can. I was like, just put it back out there. I got stuff to do. I can't do this right now. I should just went and got her some gas, but either way it goes. So I didn't get the workout in, but I definitely got a workout in.
Yeah, good Samaritan. That's how you do it, man.
We'll see, man. That kind of stuff like this thing, like, you know what I'm saying? Like, what if and this is what I always think about, like, what if that was my daughter or my wife or my mom or someone? Like, I would want someone to do that, not expecting anything, you know what I mean? And just keep it going.
Yeah, no, that's good energy you put into the world, man. I appreciate you, and I think everyone should for you sharing that. That's what's up.
Yeah. But that's enough about me. Remind me later that I'll tell you an even crazier story that happened right in front of my house with a car. But, Tyrone, for anyone listening, watching, feel free to put some comments in the chat. What you think about Bitcoin? What your thoughts are on crypto? Tyrone, before we get started, or let's just go ahead and get into it, man. We'll put some topics up here. Bitcoin. Let's just begin by explaining to the world, like, what is Bitcoin? A lot of people don't know what Bitcoin is.
This is never an easy one to answer because Bitcoin is everything and anything all at the same time. It matters the lens that you're looking through. In some places, it's money. Here, it's not. Some people it's a store of value. Some people see it as a savings mechanism. Some people see it, like myself, see it as the biggest flashlight on financial inequities in the world. I also see it as a big, sturdy clock. It's so many different things. And I think the more you learn about Bitcoin, the more you learn that you don't know about Bitcoin. So Bitcoin is a lot of things. But for the purposes of this conversation, Bitcoin big B is the blockchain. Bitcoin little b is the token that everyone freaks out about. So those two things are a great differentiator of when you're having a conversation, especially now. I'm more than a decade in. I always ask people when they mention Bitcoin, I'm like, well, what are you talking about? Are you talking about the token or are you talking about the blockchain? And then at that point, you can start to diffuse a lot of the stupid arguments that you would get sometimes around what it is, what it isn't, and it's scam, it's this or whatever else, which we can get into. Crypto is not a perfect space by any means, but it's 2026 now. We have to stop with the hyperbole.
Gotcha. Yeah. And it's definitely, so there are some people who've made money on crypto. So, and Bitcoin, they've lost money as well.
Sure.
Just like with any investment, you have to know what you're investing in. You have to know the fundamentals. But that's another reason why we're sitting here tonight and unpacking this, because crypto is such a mysterious thing to people, you know. You mentioned the big B and the little b. I don't think people realize that blockchain is considered Bitcoin, right? As you just mentioned. Can you elaborate a little bit on that? I know there are a lot of people listening who do understand that, but there are a lot who don't.
Yeah. So when I say big B, the Bitcoin blockchain, there's all types of blockchains, but that's specifically to the Bitcoin blockchain. So every coin has its own blockchain. They all don't run on the same blockchain. Also, I was explaining this earlier. There's two types of blockchains. You have permission and you have permissionless. I'm from New Jersey. I could appreciate a good toll road. So if you're on the Garden State Parkway, or if you're on the New Jersey Turnpike, you're going to pay tolls to get on, to get off. That's permission. That's like IBM using the blockchain to make sure the avocados get from Charlotte to San Diego and who delivered them and everything else. That's permission. That's not what crypto hippies like myself, what up, Kev, care about. Permissionless, like Bitcoin, means that anyone can use it at any time, send value anywhere to anyone, and that is what matters. It's you can transfer value of all types, of any types, over the Bitcoin blockchain or a blockchain of your choice. But in the case in here, we're talking about Bitcoin. The Bitcoin blockchain is where the Bitcoin token is native to, where it trades, where it's stored, where it transacts, right? Where the ledger is, and so on and so forth.
Got you. I think that's a pretty good explanation. Consider we don't have too many hours to go into it. And yeah, what's up, Kevin? Condolences to your father and your family, Kevin. But yeah, so the blockchain, and every coin has a blockchain.
Yeah.
Okay. And
there's not one blockchain. Every coin has its own blockchain.
Right. And the blockchain is the immutable record that people have where you can see every transaction that's ever happened, correct?
The only immutable blockchain is Bitcoin.
Bitcoin is the only one that is immutable. That you can't change, that you can see.
Cannot change, right? Yeah. So no one controls it. Permissionless. It's no one controls it. Now, permission. There's a blockchain network called Canton that a lot of the big financial companies are controlling, right? That's permission. So they can control what happens. They could roll back transactions or they want or whatever else. No one controls Bitcoin. Every blockchain that has been created after is controlled by somebody. We could point out who runs Ethereum. We could point out who runs Litecoin. We could point out who started Solana. We could point out who started Base and Arbitrum and all the other blockchains. You don't know. We know who Satoshi is, this mythical figure, but we don't, which I think is a group of people, not one person. But no one really knows who that is. And Bitcoin is just run by code. No one controls.
Gotcha. Yeah, no, Satoshi, that's quite a subject too as well. People have been trying to figure out who that is, and they'll never know who he is and who he, she, they, them are until they actually sell anything, right?
Yep. And their wallet has been dormant. Nothing has been happening. I think it's a consortium of people. I've had the opportunity of interviewing Jeff Garzik on my podcast, and Jeff was there very early. Some folks believe that he may either be Satoshi or be a part of that, but Jeff was there very early at the beginning of Bitcoin, and boy, oh boy, did he move and control a lot of Bitcoin. So it may still be up. I have a podcast. I had a podcast with CoinDesk, and it still may be up there. The episode still may be up if folks want to go listen to it. But Jeff is brilliant, and if you listen to him, a lot of what he says, it was clear that he was there at the beginning of Bitcoin.
Are you Satoshi?
Yeah, Vitalik does run Ethereum. I'm not Satoshi, but if I was, I couldn't tell you.
Sorry, Satoshi. I'm from the South, so we say stuff a little bit different down here. You know what I'm saying? We put our own little swing to it.
It's Satoshi.
So people know who I'm talking about. Shout out to anyone from the South watching. And you said you're from New Jersey. So yeah, let's take a second. And you've been in Bitcoin and crypto. We'll get back to all that stuff, the macro, micro, all this stuff. Let's talk a little bit about you, Tyrone. Let's figure out how you got to. You own a RIA, and then you own Turnkey. Let's go back before your RIA and Turnkey, and let's go to how you got into the financial industry.
So I got into the financial industry in right around 708. So right before the great financial crisis. My first job after being a juvenile probation officer was at a little investor relations and public relations firm called Financial Dynamics, which was acquired by FTI Consulting. And I was actually there working there when the great financial crisis happened. AIG was right across the way there. And that's how I got started. Left there, went to a broker dealer, like a little chop shop, cold calling, Rockwell Securities, learned to cold call there, pitch stock.
110.3.
Left from there and then did a very brief stint at Morgan Stanley. Left Morgan Stanley, ended up at Merrill, went through the Merrill training program, left Merrill, started my first RIA, left there, started working with Altruist and Jason Wenk, and then left Altruist to start my first company, OnRamp, and then resigned from OnRamp and started Turnkey and 401 Financial in 2022.
And so what was that turning point that made you decide to do your own solo thing?
A few things. I left Merrill because I knew that, so I'm sworn to secrecy that I can't say, but my mentor, if he's not the biggest, he's one of the biggest advisors at Merrill. He runs a gargantuan business. And he called me in his office, and I was all excited about this mythical man who created these tokens. And he's like, you ain't going to be able to do that here. He's like, if you stay here, you'll have a great career. You'll make good money. You'll do all right. But if you want to do crypto, you're going to have to leave. And I was close to graduating the program, and I wanted to finish the program. And shortly after I finished the program, and there were some other, circumstances that made me leave, like being subject to incredible racism. And I just got a nice payout for that. So thank you, Merrill Lynch.
Really?
Yeah, it was a lawsuit of some of the black advisors that were there at the time, and my case got taken all the way up to the CEO. So anyway, but
yeah, I can't talk about that much. I got you.
But I just got the settlement check, so all is well.
Did you buy crypto?
Well, no.
Okay.
I put it in my own business.
Got you. Even better. That's actually even better in my opinion.
Crypto business. So anyway, that was kind of the catalyst where I was kind of like, all right, I got to go do my own thing. And at this point, I was all in on crypto, right? And I had to learn everything about it. And I've been doing it 24/7, 365 ever since. Like, I just couldn't let it go. I bet my whole career on it because I knew everything that was happening now was going to happen. And I knew that financial advisors were always going to be behind. Like, it's 2026. I can't believe some of the things that financial advisors with all these letters after their names still say about crypto. Like, it's mind-boggling to me, and it's embarrassing, and it's a stain on our industry that I'm trying to fix. And I think, I've done everything that you could, with the CFP board and the CFA Institute, and even sitting with the SEC. And I have a course at the American College for Financial Planning. If you're an advisor, go look for it, right? And go through it. I've done stuff with NASDAQ. I've done stuff with S&P Global. I've tried to wrap my hand around it. We got Turnkey Institute now to give advisors education. I've done podcasts. I've had my own podcast, right? I had a show at NASDAQ, right? Kev was on there. So anyway, I've poured my heart and soul into this. And it means a lot to me. I'm not here for number go up. I'm not here for the whatever, is going to replace the dollar. Like, it has nothing to do with that. It's just better technology. And I think the financial system needs an upgrade. And we still have banking deserts in the United States of America. That's a problem. You know what I'm saying? And I grew up in a home without a bank account that was unbanked and then eventually underbanked. You can't grow up in a home like I did without banking and see Bitcoin and go, oh, that's nothing. It's impossible. So once I saw it, I couldn't unsee it. And I bet my whole career on it. And if I had the opportunity, I would triple down more than I did at the beginning. So I'm not here by accident. I'm here because I took a chance, and I believe in the technology. I believe in myself, and I believe in what I'm building.
Amen to that one. And I mean, I'm taking a big swing here. People swing at the crypto, at Bitcoin. What is it that you saw? You know what I mean? Like, people, it seems so complicated, people in general. What is it that you saw, like you said, that made you decide to leave a good job at Merrill Lynch? Because you definitely can earn a great salary or have a great career at Merrill Lynch if you just stay through the attrition. And like you said, you're about to finish the program. What did you see? Because the native one was Bitcoin. So what did you see in Bitcoin that made you say, besides the fact that like your family was unbanked and there are bank deserts?
Well, two things. One, you only need to see your mother crying to find the next open check cashing place so you can eat. That's what I saw. I saw my parents struggling without any financial literacy or financial access. That was the first thing. Second thing was, I had a friend of mine that exposed me to it, was a Ruby developer, and he was really into tech. He was the one who was making our fake IDs and everything back in the day. And he sent me something. He goes, download Bread Wallet. Those that are in the know, Bread Wallet was a thing. And he was like, download Bread Wallet. And I downloaded it, and he sent it to me. And I got it like that. And I was like, what? Whoa. And he was like, I told this story earlier today, and I've been telling this story my whole career. And his words were literally, the magic trick is not done yet. He three-wayed somebody else. We're on a call. We're doing this. He three-wayed somebody in. He goes, what I sent you, you're going to send them. This whole thing happened in minutes, not hours, not T+1, not T+3, minutes. And the minutes were getting everyone together. The transactions happened in seconds.
Okay.
You can't unsee that. You can't argue it. It's fact, right? Now, I'm going to double down on that. The simple way to explain it is, I don't know you from a can of paint. I only know you from LinkedIn. But if I flew to Charlotte and I didn't know you and I saw you standing on the street and I handed you $20 and walked away, you and I would know that that's $20, yes or no?
Yes.
Would you know my social security number?
No.
Would you know my address?
No.
Would you know my income?
At least $20.
You wouldn't know any of that. Exactly. There would be consensus between you and I that I just handed you $20. Now, watch this. I still don't know you from a can of paint. We hop on this live and I said, hey, download this wallet. I want to send you $20 in Bitcoin, or I want to send you 20 Bitcoin, or I want to send you 20 Satoshis. I can do that right now. It's the same exact experience, except one is over the internet and the one is in person. That's all it is.
If you send me Bitcoin, I'm going to pay taxes. But I got you on that.
You're not going to pay taxes.
There's no taxes if you send me Bitcoin? Or how's that transaction?
Oh,
let me ask you a question. Hold on. So if it's, and this is good. So if it's like you said, you just gave it to me, like gifting money is like where you're taking the example, like just gifting money. But I mean, yes, I guess for $20, it wouldn't matter.
If I send you, again, if I hand you $20, is that?
No.
So why?
I mean, I guess technically maybe, but no one's going to pay taxes on that.
My point. It's no different. That's what I'm explaining.
You could also hand me $20,000 in the exact same scenario. You can do the same thing with crypto. Would that create tax?
No.
Okay.
If you hold it, if you sell it, sure. Or you convert it to another asset, sure. But that's not the point that I'm making. I'm saying what Bitcoin allows you to do is give value to someone. The main point is you don't need to know me. Forget the taxes. You don't need to know me. I can send money to anyone anywhere in the world right now, and they don't need to know all of my information. But if I go into a bank, Bank of America needs to know all of my information, and they're going to charge me to send the money. And every time I receive money, Bank of America charges me $15 to receive a wire. For what? If I get USDC, I don't get a fee, and I get it instantly. Like, this is not that hard to understand.
So if you got the Circle product, you're saying there's no...
Forget Circle.
How is...
We're not going to do that. We're going to keep this very simple. Forget Circle. If I send you any stable coin, any digital dollar, you don't need Circle. You just need you need a blockchain and a wallet, and I can send you value. You don't need Circle.
Nice. And then, okay, so you sent me the value, you sent me the blockchain, you sent me the currency. And we'll say Bitcoin because that's the biggest one everyone knows, right? We can't, like you said, let's not go deep into these other ones.
No, we can, but mention the other ones, but we need to keep it high level because I think this is the thing. I think there's a miseducation. And I think that's the thing. That's why people feel so strongly about it. No one feels more strongly about crypto than the people who dislike it. And a lot of those people are misled. Well, if I send you some, it's taxable. No, it's not. No, it's not. It's not. So there's a lot of things, just like there's no wash sale rule on it right now. Now you have the economic substance doctrine that you need to be aware of, but there's no wash sale rule.
Right, so you can buy and sell it anytime you want.
Buy it right back, so long as you're able to defend the economic substance doctrine, right? You can sell Bitcoin and crypto losses, and you can offset those losses against stock gains, right? Like, there's just really easy things here. You can get it in any form. You can buy it in an ETF now. You could buy it in Cash App. You could buy it on Venmo. You can create your own experience around it now. Is it for everyone? No. Everyone shouldn't own it. But what everyone should do is understand it and understand the technology behind it, because that's what you're starting to see is going to make the experience better if you, one, send remittances. You have people that you send money to in other countries. If you're tired of putting your check right in the bank and then waiting 2-3 days for it to clear, if you're tired of paying wire fees, all these other things. Why do you think we have a real-time payment system?
For fees.
No.
No fees.
No. When did we get a real-time payment system? Do you know?
After Robinhood? Are you talking about like with stock trading?
A real-time payment system. Like
elaborate.
FedNow. Do you know FedNow?
Like +1, +3? No, go ahead and elaborate on what you're talking about.
FedNow is our real-time payment system, meaning like Japan has had a real-time payment system since the 70s. We just got it in 2024 after it was promised in 2019. You'll have a hard time convincing me that they didn't start to develop that and really lean into it because Bitcoin didn't come into the world in 2009. A real-time payment system allows you to send money value similar to Zelle, how you can Zelle people, but depositing your check in the bank and it available now, real-time payments, like real-time. So there's the federal government launched FedNow. And you want to know why it's not broadly adopted or people don't know? Because of banks. And they don't want to broadly adopt it because of what? If they do that, then what happens? Tyrone is no longer charged $15 every time he receives a wire. There's a reason the existing financial system is architected the way it is. There's some good things to that. There are some bad things to that. So this is what I'm saying. I'm not in a position anymore where I'm arguing with anybody about this. I had put a LinkedIn post about it. Bitcoin is one. There's nothing really to argue anymore. However, what I do think there is just broad misunderstanding, and there needs to be more education for people who want to know. You're not going to convince adults who hate this. I'm beyond that. But I think if you care about people, which I do, if you care about the disenfranchised, like I do, if you think the existing financial system is unfair, like I do, you have to root for Bitcoin. It has to be a part of the conversation because it's this big flashlight that shines a light on everything that I'm saying. That's it. So if Bitcoin goes to zero, it's a massive win because it literally showed every single thing that is wrong with the existing financial system. And you know what? The little b will go to zero. The big B Bitcoin is going to go until 2140. It's when the last Bitcoin will be mined. No one will stop it. Tick-tock, next block. You know what I'm saying? So these are just, you know what I mean? Data, greater sign, feelings.
No, this is good. And I love it, man. I appreciate your passion is great. Like, yeah, you really do care about it. And then when you tie it back to why, like you said, you saw it impacted your life and you saw that you can make a difference in your life and other people's life with Bitcoin. Just for the record, I wouldn't say I'm a Bitcoin bear for anyone listening, but I'm trying to bring the other side to the conversation. You know what I mean? But, more so, you did mention an interesting thing. So Bitcoin is there's a limited number of Bitcoin. While I was doing the bear case with Clem Miller, shout out to Clem. Clem's good people, man. While I was doing the bear case, he mentioned something I had never heard of at the time. It was called forking. You heard of Bitcoin forking? Like where a computer program went in and created like fake Bitcoins, like split them up?
You can fork any blockchain, yes. But what good is that?
I'm asking.
Yeah,
what good is it?
Yeah, I've heard of it, but what was his argument?
Well, he said if specifically with the blockchain and Bitcoin, like you mentioned, you said Bitcoin, there's a limited number of supply. I think that's where he brought it up with the limited number of supply. But if you fork them, that increases the number of supply. So I didn't know how to answer that question, so I can.
That's a very technical explanation to get people to understand, but it's simple. We're going to keep this very simple. We're not going to get in the weeds here. Fine. Could a bunch of developers and miners and node operators fork Bitcoin? Sure. But what do you get?
I don't know.
You have to get all of the consensus to go with you. There's other types of Bitcoin. Bitcoin Cash. Right? There's all types of Bitcoin, right? No, you don't need a bank account. So you can fork Bitcoin all you want, right? But you got to have consensus. The miners, the developers, the code, everyone has to agree to go there. Here's the example. Go back to what I was saying. Me and you could create our own money today. We could create our own $20 bill. We'll call it the Marcus Ty dollar. We got to get consensus from all the people in the United States to agree that our $20 is better than the other. Like, it doesn't work like that. So no one can create more Bitcoin, the Genesis block of Bitcoin. No one can do that, right? That's just, you can't. And if there's a book called The Bitcoin Standard, and then you should read the Bitcoin white paper. If you understand this, yes, there could be, fork it. Great. But you got to take all of that consensus, all of that, all those miners, all those node operators and everything with you. Again, very important to keep in mind here. Blockchain, flip it. It's a chain of blocks with information in them. In order for a block to be completed and move on to the next, you have to have consensus of every single piece of information in that block. Everyone has to agree. When everyone agrees, all the node operators and everything, okay, great. Stamp the block, you go on to the next one. If anything in that block is disputed, the block is not complete. But it's all of the information in that block. Stamp it, you go on to the next block. And it's just the history of everything on the chain that can't be rolled back, can't be removed. It's there, which is why when people say, oh, well, criminals use it. Yeah, criminals use the dollar too, but guess what? You're a stupid criminal if you're using a blockchain because it's public. Right? Like Cat Williams, you know I can see you. You know what I'm saying? Like, we can see what you're doing. You know what I'm saying? And this is, and I want Kevin made a comment. I want to make this important here. There are people who don't use a bank now. My partner does not use a bank. Right? You don't need a bank account to deposit anything into a wallet. You need to spin up a wallet and I can send you whatever. He uses an EtherFi card and that's it. He's completely unbanked himself. He only deals with a bank to do business, like our business. Personally, he doesn't use a bank. So you can completely operate on chain if you choose. You only need a bank if you want to go back into the old, antiquated, expensive world of traditional finance. And, all right, I send Marcus $20 of Bitcoin on Cash App. You can sell it right there in the app, and you got money right away. There's a reason why I suggest Cash App to this day as the best venue for people to get access to Bitcoin. Right? So it's not a matter of a bank account or any of that anymore. You need an internet connection, and you can get on chain.
That's some truly decentralized stuff right there. That's good stuff. Okay, so let's say, because we're about halfway through. For anyone listening, watching, hit the like, subscribe, check out Tyrone. This is good stuff. This is really good stuff. So let's just say that someone's listening, they've got somewhat of an understanding with crypto, Bitcoin. Okay, where should they start? What should they do? Like, you're not telling people they should have 100% crypto, right? Or are you?
You can check every piece of content.
I'm asking.
No, I'm saying I've never done that. I don't even do it with our clients. You can look at and I will challenge anybody that find a financial advisor that has a longer track record of talking about this stuff than me and see where I've said you should own X amount or whatever else. It's not what I'm saying at all. I'm not saying everybody should own it. It's not for everybody. But if you decide that, I don't decide that. It's for people who do the work. You own Bitcoin at the price you deserve. So you should read about it. You should ask questions. You should ask more questions. You should ask more questions. And then when you feel like you want to get exposure, again, I've been saying this. I said it this morning on the podcast. I'm going to say it again here. I've been saying it for years. Look up the restaurant closest to you. That's the most expensive. Figure out what it costs for two people to eat there, all inclusive. Drinks, food, dessert, everything. Buy that much. And your venue of choice, your Schwab account, Venmo, Cash App, whatever, buy it and let it sit. I know one thing. If it goes to zero, you're still going to be able to pay your mortgage or your rent. You're still going to eat. Your kid's still going to play tennis and travel soccer. If it doubles, you ain't going to spend summer in the south of France. But what it'll give you is skin in the game. You'll be able to watch the drops. You'll be able to watch the highs. You'll be able to check the price on a Saturday. You'll be able to check the price on a Sunday. You'll be able to check the price at 2 a.m. You'll be able to check the price at 12 midnight, whatever the case may be, and you'll get exposed to it, and you can learn and grow. Now, I personally feel that, again, I'm in La Jolla, San Diego. Some very rich people here. They've made their wealth off of Bitcoin. Does it make sense to tell some of these people that they need Bitcoin? No, it doesn't. If folks are younger, yeah, maybe it's a part of the conversation. If you are younger and you have a long time horizon, that's the first thing. You have a very long time horizon. You should have a high tolerance for risk. You should know when you're going to get in, when you're going to get out. And you should put an amount in initially that if it goes to zero, if all of the bears are correct, that it is the worst thing since the devil fell out of heaven, you should make sure that it's not going to ruin your life.
Man, I got you. And I also like to, so yeah, when people ask me about crypto or Bitcoin, like you gave a nice dinner for two, I'll say that, or like going to a very nice sporting event. Maybe not like the Knicks finals because that was so expensive, but like the amount that you could start with.
Whatever analogy you want to use, whatever. But that's just what I've been using because that's probably going to be somewhere around $200-$300, right? Depending on whatever, give or take a couple $100 based on zip code. But $500, it doubles, it triples. You're not buying a Bugatti, and if it goes to zero, life goes on.
Yeah, life goes on. Cool. Good stuff, man. Let's talk about some of the other things. You mentioned that you want to clarity, right? We're seeking clarity from regulations, and you've been screaming it from the mountaintops. You've talked to the SEC, you've talked to different people all around the country, just trying to educate them. Like you said, financial literacy is important. And the Genius Act and the Clarity Act, right? The Genius Act was passed last year, if I remember correctly, and the Clarity Act's yet to be passed. How do you see that? You mentioned yourself as a true crypto hippie.
Yeah.
How do true crypto hippies feel about that?
I think it depends on who you are. If you're Arthur Hayes and you're like myself, I don't think clarity is needed, but there's clarity needed. The Clarity Act isn't needed, to be clear. There are some people who want it because it is going to give clarity around stablecoins, what the SEC and CFTC is going to do. It's going to give a lot of clarity around what is a broker, what is not, all these other things, investor protections, all these things. It's tied up now based on the fact that the biggest revenue generator in the space last year was our president, as far as crypto is concerned. So the Democrats aren't happy about that. So it may be tied up here. It may be a while before it gets done. But I personally feel like with some tailoring, it's a good thing, right? I think investor protections are the main thing. Retail has gotten hurt here, and I hate that. But what I hate the most is retail have gotten hurt off the acts of awful people, not necessarily barriers and things that aren't in place. Because a lot of times when you get this legislation, it keeps people out as opposed to giving people access. So I'd prefer to have more people in and have more altruistic individuals be at the head of it, as opposed to this sweeping legislation and then people who deserve and want access can't get it, which has been the norm in this country.
Gotcha. So the Clarity Act is going to give more, it seems like it's going to actually give less clarity, but more structure, I guess,
Yes.
More regulation.
Yep. Exactly. That's a great way to put it. More structure, right? More clarity? Probably not.
And the Genius Act, that was basically to establish that you could have a stable coin?
Yeah. The Genius Act was basically all about stable coins, which is why you've seen all these. Everybody got a stable coin now, right? You should have. I'm going to have. Everybody got a stable. I don't know what the point of it is, but everybody has a stable coin.
Everybody has a stable coin. And you mentioned that the president was the largest profiteer had the biggest returns in his investment of crypto last year. What are your thoughts on that?
I don't like it. I mean, when you made more money than Coinbase's net profit, that's a problem, especially if you are the president of the United States, and this is independent of party. Right. I just don't think that should be the case, especially when I think his token is down 99% and Melania coin is down like 98, 97%. That's problematic. And again, independent, I just think the fact that our government officials could trade stocks and do some of the things that they do while representing the people is annoying to me. And I will say, I look at these things a little differently because I always feel like we need to put better people in positions of leadership. And if that's the case, you got really high quality peoples with morals, principles, and character that could accumulate wealth, power, and prestige, then they pour back into the people that they lead, right? So that's not happening here, and that's more problematic to me. But I and people are like, oh, well, his administration is going to be great for crypto, and yeah, sure. I think he's clearly turned that he hated it at one point, and he had disparaging things to say about Bitcoin. That changed, right? And he wants the U.S. to be the crypto capital of the world, and there's a new administration in the SEC, and so on and so forth. So yeah, the next 4 years could be great potentially for me, but that does not mean that there are some things that I'm uncomfortable about and things that I wish were different.
Great explanation. And here on the podcast, the live stream, Main Street Meets Wall Street, everyone knows there's nothing political here. It's not red or blue, it's about green, which rare blue makes purple. Anyone's ever seen Purple Rain, they know why the rain's purple. But, the blue in the sky. What are your thoughts? So you have 401 Financial, that's your RIA, correct?
Mm-hmm.
So you have clients and you do portfolios. Like you said, you don't particularly suggest anyone goes 100% in the crypto. So you obviously pay attention to the macro environment, the micro environment. What are you seeing right now in the economy, and how are you positioning your clients with that? Or is every client so uniquely different?
Our clients, every case is uniquely different. Every client doesn't get the same advice. We're an advice-only firm. So every client doesn't get the same advice. It's personalized. We meet with our clients monthly. And to be clear, you talk about 100%. I've never suggested folks make a 1% allocation, including my clients. I've never done it, right? Folks know how I feel about it.
That wraps up part one of our deep dive with Tyrone Ross on the structural future of crypto, stablecoin, and market plumbing. As always on Main Street Meets Wall Street, we leave politics at the door and focus strictly on the underlying economic, technology, and wealth building mechanics. Here are some takeaways from today's segment. Focus on the distinction between permission institutional networks and permissionless public blockchains. Respect risk management. Never risk capital that compromises your baseline financial security. Keep a close eye on the legislative shifts like the Clarity Act as digital assets continue integration into traditional wealth management platforms. And for more macroeconomic breakdowns, subscribe to the Wall Street South Journal over on LinkedIn. We're up to around 1,400 subscribers. Check out this channel right here. If you want to go deeper into some actual financial planner, you need help with that side, you can check out my company, The ABC Squared, and theabcsquared.com is actually the website. Once again, it's Sturdivant Sr. Part 2 drops next week with Tyrone Ross, where we finish this up. This will encapsulate the Bitcoin bear case, bull case, but I'm sure we'll have other people talk about it in the future. We have some good guests coming on, a great lineup. So until next time, Main Street Heart meets Wall Street Smarts. Thanks, Main Street.
I saw my parents struggling without any financial literacy or financial access. His words were literally, the magic trick is not done yet. He three-wayed somebody else. What I sent you, you're going to send them. This happened in minutes, not hours, not T+1, not T+3, minutes. And the minutes were getting everyone together. The transactions happened in seconds. Can't unsee that. You can't argue it. It's fact, right? Now, I'm going to double down on that.